So I'm in my 30s, and by now I have made most of the financial mistakes as humanly possible. My financial knowledge is mostly through the mistakes that I've made. So in this video, I'll go over 9 money mistakes in your 30s that you should absolutely avoid in case if you're already making them, how to correct them. By the end of the video, you'll find out some of the mistakes that are so embedded in our life that you won't even realize that you're making them. Number 1, neglecting passive income and lacking high income skills. In your 20s, I'm pretty sure that you were happy with just one job, just focusing on your education and getting into a stable career. But in the 30s, this is the time that you need to start thinking about other sources of income. Your main source of income should never be jeopardized. In a perfect world, we would always want to have a source of income, invest that into multiple other sources of income where we can generate passive income and live off of that passive income. So the principal always stays safe. However, 90% of the time, that's just never the case. It just never happens for a lot of people. So in your 30s, you should focus on creating other streams of passive income, whether it's dividends, stocks, or rental properties, or a side business. Passive income helps you build wealth even when you're not working. It's like a financial safety net that grows over time. In order for you to accomplish that, you also need to focus on high income skills that's worth learning. This can also help you make passive income. Number 2, not reviewing your insurance needs. Second mistake is not reviewing your insurance needs. Yes, I've been there. In my 20s, I was looking for the cheapest insurance possible. Didn't really care about protection as I was stranded for cash all the time. Find out the cheapest insurance with the most coverage, no matter what the company is. But as life changes fast, so does your insurance needs. As you grow older, you should start focusing on your insurance coverages. Maybe you're married now and have kids or bought a house. Each of these life events changes the equation, and so should your insurance. Take a little bit of time and go over your insurance policies and coverage. Now, some of the coverage that these insurance companies offer are completely pointless, which should be eliminated. Number 3, ignoring your credit score. This is the time that you should strictly focus on your credit score and credit building. We're not in our 20s anymore, and even if we ruined our credit back then, we would still have time to rebuild it. Maybe you're in the market to buy a house or financing a car. Whatever the case may be, your credit score is one of the most important aspects of your finances. It will help you determine your credit worthiness and interest rate, and sometimes even renting out a place. You should track your debt and come up with a plan to lower your debt and take necessary actions to improve your credit score. Speaking of improving, hi, my name is Tasvir Mirza. I'm a realtor and a diversified investor based in South Florida. And on this channel, I make finance-related videos based on my mistakes. Consider hitting the like and subscribe button below as it helps the channel tremendously. Number 4, not having an emergency fund. Life just happens, right? You never know what's gonna happen tomorrow or the day after tomorrow, hell, even an hour from now. Any of this time or any of this occasion could come up with some unexpected expenses. It could be a sudden job loss or medical emergency. Anything could happen. All the financial gurus will tell you should have an emergency fund 6 to 12 months worth of living expenses saved up somewhere. But we're in an economy and right now in a situation where it's very hard for most people to have 12 months worth of living expenses saved up. I would suggest not to pay too much attention to this. You should save as much as you can, whether it's for a month or 2, whatever your financial situation allows you to do so. Definitely have an emergency fund set up. You could simply have this by having a budget, automating your savings, or increasing your income. Whichever way you see fit and it works for you is a good way. Number 5, neglecting the impact of inflation and lifestyle inflation tax. In the last couple of years, I'm sure you've been hearing this term, inflation, throwing around in every conversation. Inflation is basically the value of your money eroding over time. If you're in your 30s, you need to start investing into assets that outpaces the inflation rates, such as stocks or real estate. There is another terminology that goes hand in hand with inflation is lifestyle inflation tax. Basically, what that is as your income increases, you tempted to match your lifestyle along with your increase of your income, such as bigger house, nice cars, fancy vacations. But if your income and your expenses grows at the same time, you're not really giving yourself a buffer. So anytime your income drops, but your lifestyle has already increased, it will be really hard to downgrade. If you've done that in your 20s, that's completely understandable. You're just learning about life and expenses and money. In your 30s, this is the time you need to play off with your money. Increase your retirement contribution, building an investment portfolio, and increase your lifestyle slowly. And I'm not opposed to improving the quality of your life. I always believe that money is a tool for happiness, and you should absolutely enjoy your money. But the safest way to achieve that is by slowly increasing your lifestyle as your income grows. Number 6, not investing in yourself. Your personal growth will not be possible if you don't invest in yourself and your personal development and education. At this point, you need to start focusing on bettering yourself and invest in yourself by taking online courses, reading books, or joining networking groups, and practice self-care. And that does not only apply to your financial health. You should also start focusing on your physical health. Those days are gone with partying all night, unlimited supply of alcohol, heading to work the following morning as if nothing happened. Let's face it, we're not in our 20s anymore. And at this time, we need to start focusing on our health. Speaking of investing in yourself, I see 90% of my viewers are not subscribers to my channel. Now, I have a goal to grow this community 1,000 strong by the end of the year. Consider investing in the subscribe button below and joining the community. Number 7. Investing heavily in trendy sectors. Now, at this point of the video, I'd like to talk about an investment opportunity that has huge upside potential with very little downside risk. Yes, I'm talking about NFTs. Remember those monkey pictures that were bored? Let's face it, if you're in an age bracket right now in the 30s, that you don't really have the option to make investments which are just simply trending, that does not have any solid leg to stand on. Yes, they're fun, makes a lot of money, as it is a very segregated group of people at a very small period of time they make all the money. But in the long run, for millennials like us, that does not make any sense, neither it's a very good strategy. For anything that is trending and not a good financial product, you should consider that as gambling. You should only invest into those out of the money that you're willing to lose. Absolutely no strings attached and just for fun. And that's not only NFT, there's gonna be more that's gonna come up. Focus on investing into those with a long-term plan, such as real estate stocks, bonds, or index funds, as opposed to something that's just trending now and tomorrow everyone's gonna forget about it. Number 8. Lack of financial planning with partner and estate planning. Now, beside investments, it may also seem far off to think about retirements or 401ks at this point of our life. But I'm sorry to be the bearer of the bad news, but the last time I checked, we're not getting any younger. And now it would be a good time to start thinking about our future. Take advantage of the employer matching 401ks and Roth IRAs, or talk to a financial advisor for the best route that fits you and your needs properly. And finally, number 9, failing to educate yourself financially. The most taboo topic, money. Money talks can be intimidating, but understanding the basics of budgeting and saving is crucial. The majority of the people does not understand money, the importance of budgeting, or the simple 50-30-20 rule for managing their income. What cannot be counted cannot be measured. Majority of the people ongoingly hurting themselves by not educating themselves about money or finances, which has a compound negative effect in the long run. In my opinion, it's never too late to start learning about money. No matter whichever age bracket you are or whichever income demographic you are, start educating yourself about money. And if you want to learn the budgeting mistakes that I've made, you should definitely watch this video here. Thank you for hanging out with me. See you in the next video. Neglecting the impact of blah, 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 blah.